Welcome to Swayam massive open online course on public financial administration. Today we are going to discuss on taxation. Dear students, you all aware how taxation and policy of tax is very important for us. And India, you all aware tax planning, tax policies and tax laws are quite complex to understand, but it is imperative for our livelihood. And be an educated student and being an Indian citizen, you all require to have some knowledge on taxation, tax policies and laws related to income tax. As you all aware, income tax is of very many types. We tend to collect income from various sources. In Indian Income Tax Act, we have 5 types of income. One is income from salary, another one is income from business, income from other sources, profession and also from house property. All these various types of incomes varies from one individual to another. Along when you talk about business income, we can also talk about corporate taxes and so on. In India, we have 2 types of tax. One is direct tax, where we come across all types of income from salary, house property, business, profession and other sources. As well as we have an indirect tax. You all know now it is very popularly called as goods and services tax. In addition to this, we do have some other few types of taxes like stamp duty and so on. You would have studied about various types of income taxes and also goods and services taxes in varied means, but today we are going to specifically study on 3 major topics. One is tax evasion, another one is tax avoidance, and finally we are also going to discuss something on tax planning. Followed by tax planning, we are also going to discuss on various tax slabs that we are having in India, like new regime tax slabs and also old regime tax slab. Followed by that, we are also going to see what are the benefits to avail new regime tax as well as old regime tax. And we also going to see few examples on how tax liability needs to be calculated and how to proceed with that. So, we are going to start with tax avoidance as well as tax evasion. When you talk about tax evasion, we have tax evasion is an illegal activity. We all aware that no one in India would really happy to pay tax, because we always think that I am earning out of my hard salt, why should I pay tax? This is what the question that always dwell around in my mind and in everybody's mind. But if you think about tax, that is the real hardcore engine of our Indian economy. Just imagine if you are all going to stop paying taxes in both direct way and indirect way, what will happen to India? What will happen to our welfare economy? And what will happen to our economic condition, economic growth, public expenditure, welfare schemes and various other policy schemes and programs? So, we all need to understand firstly, tax is very important for us and it is the engine for our Indian economy and for every welfare state across globe. So, by keeping this as a very first point, we are going to discuss on tax evasion today. Tax evasion is an illegal activity. Why it is an illegal activity? You are earning more, but you are not ready to pay tax and you want to hide it from the government, then it is called as tax evasion. We are going to understand tax evasion in a step by step manner. First of all, from this you can see that tax evasion is an illegal activity and tax evasion can be done by concealing or forging income that you are actually earning. You also try to misrepresent your income or followed by various deductions that comprises to your income. In India, according to Income Tax Act of 1961, Chapter 22, it deals with various penalties and punishments for the offence caused due to tax evasion. Followed by that, you can see how tax evasion, what is tax evasion and how do people engage in tax evasion. These are the various ways how people engage in tax evasion. The very first thing is reporting incorrect information in ITR. What is ITR? Income tax return. Whenever you are earning an income throughout your financial year, for example, starting from 1st of April till 31st of March, for example, you are earning every month 50,000 rupees. What is your total income? It is 12 months multiplied by 50,000 rupees, it is 6 lakhs. Now, you have to pay tax for whatever earnings that you have, but you are misrepresenting this income in your ITR while filing your returns. Then that is a very primary way of evading tax, followed by ignore showing an income. For example, you may be working in an office for a salary of 1 lakh per month. Total income for you is around 12 lakhs per annum. Along with that, you are having a rental income. Maybe you would have some investments where you are getting a very good return, maybe more than 10% or 12%, but while filing your tax returns, you are just mentioning your salary income and you are not showing your income from other sources like house property or even from your even with regard to your investment. This is one other type how people engage in tax evasion. Thirdly, maintaining bank accounts outside India. Students, you all aware that in India, holding a PAN card is very important. What PAN stands for? It is permanent account number. What is the use of PAN? For example, you are opening a bank account or you are doing any financial transaction, your PAN card should be used. While you are using a PAN card, all the financial transactions will be registered in that PAN card, which can be easily tracked as well as traced by income tax authorities. But it will all happen only if you are handling a financial transactions within India. If you are having a bank account in Indian bank, for example, and you are having any interest income from those banks, your PAN card will clearly give a details to income tax authorities about various interest income that you are having with banks inside India. In case if you are holding a bank account outside India, definitely we cannot easily track those interest income or other source revenue through the transaction that you are doing outside India, and this will also be counted as tax evasion. Next point, falsifying financial statements. If you are running a business and your turnover is in like crores and you will just maintain your books of accounts easily to evade tax by just projecting a loss or with a very less profit, this will also be counted as a tax evasion. Then you all aware it is smuggling. If you are doing any kind of illegal business activity like import, export without paying proper tax or even indirect tax specifically, then it will also be counted as tax evasion. And finally, not paying the tax liability. For example, your actual tax liability is 5 lakhs per annum, maybe when after due calculations of your net taxable income and also after calculating your deductions, but you are not ready to pay your tax liability, then this is also one of the ways that where people can engage in tax evasion. So, students, hope you all understand what we discussed today about tax evasion. First, you all need to understand tax evasion is illegal in India as per the Income Tax Act of 1961, Chapter 22. And Chapter 22 is also talking about various penalties and punishments for evading tax. Now, you would have also understood what are the various ways people engage in tax evasion. If you are going to deal with all this kind of tax evasion, definitely you will be punished and you will be bound to several penalties as per IT Act. Now, we are going to see what is tax avoidance. Just see, tax avoidance is an act to minimize tax liability through legal methods. From the first line itself, it is very clearly understood that tax avoidance is not illegal, but don't suddenly think that you can dwell upon only tax avoidance. We are going to see about it in depth now. Tax avoidance is not advisable as it could be used for one's advantage to reduce the amount of tax payable to the government. Tax avoidance is also immoral because it involves dodging of tax and it leads to the deferment of tax liability. So, students, you may understand that tax evasion is illegal clearly, but tax avoidance is not illegal, but in deep if you understand this concept, it is not ethical because where you are not ready to pay the tax liability which you have to pay, but you will use all the possible legal ways to get rid of the tax liability which you have to pay. It is also one of the ways to do tax avoidance is to adjust the accounts in such a manner where there will be no violation of tax rules. For example, students, you may understand about business income. If you are running few businesses, maybe business A, business B and business C. Business A and B is really having more profits, but business C is not having enough profit and it may also incur loss. What you will do? You will just pick up all the profits that you have earned through firm A and B and you will try to manage with the loss that you have earned through business C. In this way also you can do avoidance of tax. Avoidance of tax is lawful, but in some cases it can also be considered as a fraud. If you are going beyond avoiding tax legally and if you are touching the thin line to the tax evasion, it will also be considered as a fraudulent act. So, students, you may understand tax evasion, you can also understand tax avoidance, but now we are going to venture into a very important topic, that is tax planning. You may think, what is tax planning? Tax evasion and tax avoidance is quite easy to understand. Quite evasion is illegal and tax evasion is illegal, tax avoidance is legal, and tax evasion is illegal and also unethical, but tax avoidance is legal and unethical. But this tax planning is quite very interesting for you all to understand. Once after studying this topic today, you are all going to venture upon tax planning from now on, right? So, we are going to see step by step manner about tax planning. What is tax planning? Tax planning is the analysis of one's financial situation from a tax efficiency point of view so as to plan one's finances in the most optimized manner. So, you may think, what is optimized manner? You may also think, what is one's financial situation and so on. For example, students, you are earning a salary of 1 lakh every month, so that your annual income is 12 lakhs. Just imagine if you are falling under a slab of tax for the first 2.5 lakhs, what is the actual tax you need to pay? It is nil. Since your income is exceeding 5 lakhs, what is the percentage of tax liability you have to pay? It is 5% between 2.5 lakhs and 5 lakhs, which is 12,500 rupees. Then after whatever is left, after calculating 5 lakhs, which is 7 lakhs, again you have to paying a tax. In this way, tax liability will be calculated. Now, if you check about your tax liability, roughly 12 lakh minus 2.5, it is 9 lakh 50,000 rupees. But legally speaking, we have several exemptions and deductions which can be legally and lawfully we can calculate and we can reduce our tax liability to a certain extent. This is what we understand as tax planning. Tax planning allows a taxpayer to make the best use of various tax exemptions, deductions and benefits to minimize their tax liability over a financial year. Tax planning is a legal way of reducing income tax liabilities. However, caution has to be maintained to ensure that the taxpayer isn't knowingly indulging in tax evasion or tax avoidance. So, students, this tax planning may seems to be very interesting, but you need to procure more knowledge about tax planning. In order to proceed with tax planning, what you all need to do? You need to understand what are all the expenditure where you can claim exemptions, what are all the expenditure you can consider as a deduction. Today, we are not going to see everything in depth, but I can give few examples. For example, you are having a salary income, you can claim a deduction of 50,000 as standard deduction. If you are paying rental expenses, if you are paying some money for your rented house, then you can claim some exemption under HRA, which is house rent allowance. For example, you can also paying some premiums for life insurance corporation, postal life insurance or national pension scheme, or even you are repaying a principal and interest for your housing loan. You can consider all this amount to certain limit under tax exemptions. So, students, you are going to earn income in future, right? Definitely with a very lump sum income, So, in that point of time, you should all remember that you should never engage in tax evasion or tax avoidance. You should all work on tax planning legally and lawfully. So, now we are going to discuss everything with one comparative table. You are going to compare tax evasion, tax avoidance and tax planning. By the definition, we can clearly understand that tax evasion is a deliberate way of avoiding tax in illegal manner, and tax avoidance is reducing the tax liability within a legal scope, and tax planning is reducing tax liability by availing all the provisions of exemptions and deductions. When you think about its legality, if you talk about tax planning, it is legal, it is also ethical. But if you think about tax avoidance, it is legal but not ethical. And finally, when you talk about tax evasion, it is both illegal and also unethical. So, next we are going to see its consequences. If you talk about tax planning and tax avoidance, there is no consequences of paying any penalties or punishments because it is legal and lawful. But if you think about tax evasion, it is considered to be a criminal activity and criminal charges may be filed along with imprisonment or even penalties. If you want to see an example, if you are going to engage with tax planning, you can work on with the exemptions and claims and deductions related to your HRA or leave travel allowance and so on. If you are working on tax avoidance, then you have to delay paying your tax liability. If it is a tax evasion, just you are going to file a falsified tax returns. And finally, you are going to understand its purpose. The purpose of tax planning is minimizing the tax liability within the lawful framework by exercising the exemptions as well as deductions. When you think about tax avoidance, it is again minimizing the tax liability within the bound of law. And finally, tax evasion is avoiding payment of taxes altogether. So, students, now you may get a very wider picture about all the three concepts starting from tax evasion, tax avoidance and tax planning. And being an Indian citizen, we all need to work on perfect tax planning in order to reduce our tax liability in a lawful means and also enjoy all the benefits from this nation. So, now we are going to see about various tax regimes and various tax slabs that is available with Indian taxation system. Now, we are going to see about the old regime tax slab. When I say old regime, new regime, do not think too much about it. It is all about the option that can be exercised by every taxpayer according to our Income Tax Act. When you talk about old regime, if you comes under an individual category, but you do not come under a senior citizen category, if your age is less than 60 years, up to 2,50,000, your tax liability is nil, right. You can exercise an exemption of 2,50,000 rupees, and if your income is above 2,50,000, but up to 5 lakh, you can enjoy a rebate of 12,500 rupees, which is 5%. Maybe if your income exceeds 5 lakh, you are not eligible for this rebate. And if you are having an income above 5 lakh till 10 lakh, you are eligible, you should pay tax up to 20% of your income belong to this particular tax slab. Then finally, if your income goes above 10 lakhs, then you come to the bracket, you comes under the tax bracket of 30%. Similarly, you have a similar taxation for senior citizen, and for a senior citizen above 80 years, then the tax regime tax slab is nil up to 5 lakhs. Now, coming to the new tax regime, up to 3 lakhs it is nil, and if your income limit is up to 6 lakh, you have to pay 5% of income tax for the amount that comes under this tax bracket. Then again from 6 lakh to 9 lakhs it is 10%, 9 to 12 lakhs it is 15%, 12 to 15 lakhs it is 20%, above 15 lakhs it is 30%. So, students, this tax slabs is very easy to have a look upon, but you need to understand various regulations that are comes along with this new regime and older regime. We are going to see about it now. These are the deductions that are allowed under both regimes. See students, if you are going to exercise new regime or old regime, all the differences are going to rely only on the tax exemptions and deductions. If you are going to avail old regime as well as new regime, there are certain deductions which things to be common, but certain deductions which you cannot exercise in selective regimes. For example, if you are going to opt for old tax regime, first deduction, as I discussed earlier about the standard deduction, you can avail, being a salaried individual, you can avail 50,000 rupees as a standard deduction. You can also avail LTA exemption, that is leave travel allowance, and as an individual you can also claim a tax deduction up to 1,50,000 under 80C, and finally you can also claim your medical expenses deduction under the section 80D. Followed by that, if you are having an housing loan and you are paying interest for that housing loan up to 2 lakhs, you can claim as a deduction. And similarly for higher education, for charitable donations and also for your savings account, you can enjoy deductions. In case if you are exercising new tax regime, you are not allowed or you are not eligible to exercise few tax deductions or exemption, which we are going to see. For example, you can claim this 50,000 standard deduction if you are engaging with both the regimes, but other than that you are eligible only for section 24B deduction on interest paid on home loan and employer contribution to NPS under 80CCD 1B. And new tax regime gives a space for tax free for PPF and also Suganya Samriddhi Yojana, and you also have very less number of deductions under new regime. So students, now you may think why there is very less number of deductions under new regime and why there are more number of deductions under old regime. Now you all need to put your heart and mind and think which regime you need to select when you are earning an income. Now this is a point where you have to understand. For example, you are earning an income and you are having more savings and investments, then it is a very good option that you should use old regime where you can claim more exemptions and deductions. If you are not having enough investments and you are not having any specific expenses like housing loan or payment of interest for housing loan, it is better you can switch over to new regime and you can enjoy your tax benefits. So here I have also mentioned few points on calculation of income tax. Now we are just going to rethink on whatever we discussed with regard to income taxes. When I informed you earlier, we have as an individual we may have so many sources of income from salary, business, profession, other sources and also from house property. Being an individual, if you are going to file a tax return, you need to calculate your tax liability. First, what you need to do, you have to pull up all the income under all the available heads of income and you have to consider that amount as a gross taxable income. Clear? After that, what you need to do, you need to deduct all the possible deductions like 80C, 80CCD and so on. Then after deducting everything, you will come across one particular drop down boiling point which is called as next taxable income. After considering this net taxable income, you have to select old regime or new regime, then you have to identify your tax slab. Based on that, your tax liability will be calculated. I have also provided few examples which you are going to discuss later. After calculating a tax liability, as per Income Tax Act and as per the regulations of our Indian government, you should also pay a cess for health and education which come up to 4%. So, this is all that we have discussed with regard to calculation of tax. So, students, we are just going to do one small recap now about whatever we have discussed now. Firstly, we have discussed about three major points with regard to Indian taxation system, starting with tax evasion, tax avoidance and tax planning. After that, we have discussed about two types of tax regime. One is old regime and other one is new regime. We also discussed few points on which tax regime one individual should choose. And we also went through a very small cap on the calculation of income tax, how gross total income tax should be pulled up, how to deduct all the exemptions and deduction to come up with next taxable income, then based on the slab which you choose, based on the regime of tax which you choose, you have to calculate your tax liability, and finally cess for education and health of 4% should be added. Now you are ready to file your returns and you should be ready to pay your tax liability. So, students, you should understand again, tax is very important for any growing economy, and nation like India is literally depending on tax to manage its deficits in the every annual budget. So, it is our right and also a duty to pay tax legitimately to the government in order to run our economy in a very successful way. Thank you all and all the best for your future.